So we've got this massively oversold crypto market at the time where the macro narrative is at peak. Everyone's like, inflation's going to be 20% forever, and Europeans are going to be dying in the streets because there's no food, and they're going to, they can't afford to heat their houses, right? That's the narrative right now. Okay, so how much worse can this be?
Hey guys, welcome back to the channel. Today we have Raoul giving us a market prediction for crypto and how the landscape is looking for the rest of the year. In the midst of the crisis that has seen many cryptocurrencies plummet, Raoul believes the crypto market is nearing its bottom. As crypto asset values continue to tumble, the former Goldman Sachs executive explains why he believes the market is on the cusp of a major shift, despite the fact that crypto is in full panic mode. Powell says that just like past cycles, many cryptocurrencies are going to zero. However, even if Bitcoin prices have fallen to a 2-month low versus the US dollar, 46% of Bitcoin owners are still profiting. It's easily outperformed all other assets over the last decade. The 17 best performing asset classes from 2011 and 2021 were tracked last year, and Bitcoin handily topped the list with a 230% annualized return. The Nasdaq index came in second on the list with a 20% annualized return. Let's check out this interview with Raoul as he tells us what to expect in the crypto market for the rest of the year. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
And any rate of change means that the risk reward of digital assets from here, normally when you get to this confluence of events, the risk reward is somewhere between 20 to 50x. Now, it depends where you are on the risk curve, which is going to ask the second part of your question, Mark. So Bitcoin is the least attractive asset because it has, least attractive of the major assets because it has more stability, further network effects. Therefore, as you get further network effects, your growth comes down over time. So, where would Bitcoin go in the next cycle? Who knows? But let's say 200,000. But then we look at the network adoption effects in Ethereum. How many people are building on the Ethereum network? The ability to now get yield on the network. What's that going to mean for DeFi? Who's going to build DeFi on top of this new kind of benchmark yield rate that's coming out of this? All of the people who are building NFTs, all of the stuff going on, okay, that's mainly happening on Ethereum right now. Great. Ethereum's slow and Ethereum's expensive. So the market will seek the path of which they can get more stuff done at a faster pace, and they will make trade-offs. Trade-off is decentralization versus speed and cost. So when you move out the speed and cost curve, you basically arrive at Solana, Avalanche, Algorand, there's a whole bunch of these layer ones. So, then you start splitting out those assets and say, okay, how do I differentiate? And it's quite difficult, unless you're a technologist. But basically how I perceive it is, Solana seems like it wants to go for the masses and create these kind of onboarding experiences, front end. They've got a mobile phone. They've got amazing NFT marketplace. They seem like they want to get involved in the public. Then you've got Avalanche, and that seems to want to be more technical. We've got these subnets. You can do your things. It's a bit more technical, and we can probably financialize real assets on it. That seems to be their narrative. Algorand, somewhere like the financial marketplace, stuff like this. So I just look at these and say, okay, what we're going to see is the market probably Bitcoin underperforms, Ethereum next, whichever one of these, and I don't know which ones, will do pretty well. And then there'll be new tokens of which we don't really know yet coming in that solve more problems, where you'll see the 1000x upsides that we've seen in past cycles.
Over the last 24 hours, approximately $300 million in long and short positions have been liquidated across cryptocurrency markets. With losses accelerating, many analysts wonder if crypto will overcome market volatility. Retail investors were the driving force behind this movement during the last decade. However, sovereign wealth funds, global financial institutions, businesses, pension offices, governments, and other institutional investors are becoming more aware of the crypto market's potential.
So if the rate of change stops, right, you've stopped the pressure on markets. Now, it doesn't mean they explode higher. It's not 2021 all over again. But if the pressure stops because the rate change, because QT stops and they stop raising rates because they want to see how bad this is. Okay, So the probabilities then come of rate cuts, or if not, at least it's going to be stability. They're unlikely to raise rates higher. Okay, so that's generally good for risk assets because they're forward looking. So that's where it comes into crypto. So crypto is really interesting. Same with technology stocks, is they are in an exponential logarithmic uptrend because they are network adoption models. We're going further out the risk curve now, finding people who are taking those bets because those bets are going to be more important drivers of returns than ETH or Bitcoin over time. So in technology stocks, we've got the relentless, ongoing, ridiculous pace of rise of AI, robotics, EV, space, Internet of Things, 5G, 6G. Genetic sciences, all of these things are all coming together at the same time. It's the fastest pace of change humanity will ever go through. It's hard enough for us to deal with on societal level, but that's not stopping. Part of that is blockchain technology, digital assets. They're in the same exponential trend, but maybe even faster, because crypto with 300 million users is the fastest adoption of any technology the world has ever seen, twice the speed of the internet. So if you can visualize, is you've basically got this massive uptrend that is exponential in nature, but when you put it on a log trend, it's quite nice and smooth. But you've got these big swings. Those big swings are driven by the macro. So what we've done is we're at the bottom of the macro cycle. The beach ball is now being held underwater. But don't forget, every day there's new people building in the ecosystem, there's new adoption. People like Ticketmaster have issued 10 million NFTs without anybody realizing. The scale of what is happening is ridiculous. So the beach ball is held underwater. The moment quantitative tightening or rate rises stop, the beach ball rises above the water. You can't hold it down. And so that is why I am incredibly interested at this moment in time, right here, right now, because I think we're getting very close to the point where growth implodes. We've already seen 2 quarters of negative GDP in the US. We've already seen housing rollover. We've already seen supply chain issues ease. We've already seen most commodity prices fall 50%. We've already seen the dollar explode higher. The dollar's hugely deflationary because the largest exporting nations in the world, Japan, Germany, China, have all seen their currencies decline massively. So they're now selling finished goods at much lower prices. So the macro turn is very close. When we look at on-chain analytics, we start to see things that only ever happen in these massive bear market sell-offs, the 2014 sell-off, the 2017 sell-off, stuff like that. We also are at the bottom of the logarithmic trend channel, 2 standard deviations oversold. That's usually a good one. We're at the 5-year exponential moving average. That level has proven to be about the best risk reward you can ever find. Things like, if we use technical analysis, things like the RSI are oversold as they have been at the bottom of every other cycle.
Raoul goes on to say that from a macro perspective, the stock market as well as the cryptocurrency market are both on the verge of experiencing a worse recession. Powell believes that the end of the year is when we will experience a proper bounce or bottom based on all the technical indicators he employs. He believes that many people are likely to panic between now and then, but if the central bank reaches the inflationary threshold, Raoul feels the Federal Reserve will have to intervene. Many analysts feel that the current banking system is on the verge of collapse and that the fiat currency world will have to make a major adjustment or else it will ultimately come crashing down. Raoul says he still sees the bull market ahead, but until we see what happens in the crypto market in the next 30 days, we'll have to wait and see. What do you think about Raoul Pal's interview on the crypto market? Comment down below. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.